Hi, my name is Jeremy Duncombe from Accord Mortgages. I'm here to talk to you today about helping brokers to help themselves. And I'm really keen that doesn't mean that I try and tell brokers how to do their job. This is much more around how lenders and brokers can work together to try and get the best outcomes, particularly in the current environment. So here we go. So help brokers to help themselves. The first thing really that we're starting from is a synopsis that we all want the same thing, the widest choice, the widest possible product range with the best service. And so how do we free up lenders to concentrate on that job of increasing their product ranges and improving the service that lenders can provide to you and your clients? And as I said right at the beginning, this is definitely a two-way thing. This isn't about me trying to tell you how to write mortgage business. Hot topics I'm going to cover today, a number of things. First of all, to try and get some background about why this is so important. So I'm going to talk about some lending strategies, pricing and criteria, loan to values, which is a hot topic for everybody at the moment, service and capacity, and then broker support, how brokers can be helped by lenders, and why communication and working together is also so important. But there is an elephant in the room, and I think I want to confront that before we move on. And that is really that we're 7 months into this pandemic, and some of the questions that I hear on a regular basis as to why lenders haven't sorted this out yet. Number of conversations around how much support there is out there, but these questions keep coming back, which is, you've had enough time to sort this out, so why are there still issues out there? And you're right, it's 7 months down the line. However, there are a number of issues that still remain, which mean this isn't a normal market. And I'm going to talk about some of those today. Surely lenders need more people. Yes, we do, but for how long? I think we'll have a look again at that as to why that's important and what lenders are doing about that, and how long we will need those extra people for. And then, because margins have improved, shouldn't we be in a better position? Yes, margins have gone up, but provisions equally have gone up massively. If you look at any of the half-year results that lenders have put out, they've had to put a lot more money into provisions for potential future losses. So that's something that all lenders have to be aware of at the moment. And then, why can't you lend at high loan to values? Well, I do think that's a really good question, and one that we will come on to in the next sort of few minutes. But let's start with lending decisions. Why do lenders make decisions, and how do they make them? Because ultimately that's important as to the current market. We all have appetite to lend, but it differs. Every lender is different. Every lender has a different strategy. And those four factors that are on the screen there are the four things that all lenders have to take into account. However, each lender has a slightly different priority. From our point of view, we have very strong capital, very good liquidity, and an appetite, a risk attitude that means that we are prepared to make common sense decisions. And what that means is that the real reason for our decisions are around service capacity, and what service we're prepared to give to our brokers, i.e. yourselves. And that drives the decisions that we make, because we do have appetite to lend, but we want to make sure our service remains. Other lenders will have different priorities. Some may have different capital requirements, or challenges on liquidity, or a different risk attitude because they are interpreting the market in a different way. But again, we'll cover some of those in the next few minutes. So let's go back to the factors that are at play here, why some of those decisions have come about. Well, let's go right back to demand in Q1, where we thought we were in a relatively normal market, where we thought the masks were for Halloween or for bank robbers. But, it was a very different world back then. There was a great deal of momentum, and that was driving the market, and lenders were really playing very hard at that stage of the market. But then pent-up demand started to happen from the lockdown, and valuations. There were some backlogs on surveys that were really causing the demand to back up. And then priorities changed. Lenders started to need to move colleagues into collections and recoveries teams. And now we're seeing, as we come out of that the other way, that stamp duty holidays are looming. There is the Help to Buy end date, which is at the end of March as well. But the market is still creating a lot of demand, particularly from home movers who weren't there before, and are now starting to look at the types of properties they want to buy. And ultimately, those deadlines continue to drive that demand. From a supply point of view, there was a capacity challenge during lockdown. Surveys, as I mentioned, already had a a backlog of things that we had to catch up with. And then the payment holidays, which were dropped on the market very quickly, meant that colleagues had to move across to help other parts of the business. There were some challenges for some lenders with appetite and funding. And what we don't want to be as lenders is last man standing. And what I mean by that, you don't want to be the only lender lending in a certain sector, or the only lender in the market that will take a certain type of customer, because then you do get inundated. And a number of lenders then have their own views on what will happen next. House price inflation, for example, I've seen forecasts from a drop of 10 to 15% to an increase of 5%. So it depends on your stance on house price inflation, and also about unemployment. What we are seeing is that the types of people who are affected by unemployment tend to be the 18 to 25-year-olds. But a lot of those won't be home movers or first-time buyers. They won't have got on the housing ladder there. But unemployment is still a factor, as is the economy generally. You know, what's going to happen with furlough? What's going to happen with the latest lockdown? And then regionally, what are the variations that will affect not only different regions in the country, but different towns and cities within those regions as well? So it is a very changing picture, particularly with things like types of property, flats. We're seeing some interesting conversations happening around flats at the moment, because people are tending to want to move into houses, have a bit more garden, and have some space, particularly with what's happened during lockdown. And then different employment types. Obviously, the difference between somebody who is in the hospitality industry and who is a key worker, there are different underwriting decisions to be made there. And this is an open-ended crisis. We're not sure when it will end. We know it will, and that does give some confidence, because we know that it's very different to the 2008 crisis. But in terms of solutions, this is where we start to get into what we can do about this and why it's so important. The first thing we found is communication and signposting are vital. So trying to explain what we're doing, why we're doing it, and the consequences that may have. And if there is a decision to be made, we've maybe got 3 or 4 things that we could choose. Which one is the least worst of those? It's not about selecting good options, it's about what's the least worst. And then understanding. There's a lot of understanding two-way between brokers and lenders, and that's where this communication is so important. But also communication with clients, with estate agents, with builders, to try and plan and understand what is actually happening and signpost why maybe priorities need to change. Planning, support, confidence, all really, really important things. And then the working together element is the bit I want to talk about next. And working together isn't just for one side. It is exactly that. It's what's in it for me. Why would I do some of the things that you're asking me to do, and why they're so important? And I think if we all feel that there's something in it for us, we're more likely to get involved and to help each other. From a lender perspective, we're really keen to create more capacity. We have a finite number of colleagues. How do we best deploy them? I would far rather use our underwriters to underwrite cases than I would to answer queries on the phone asking, you know, what's the update on their case, because that can be done by self-serving. So less time we can spend on phones, not per se, because spending time on phones is really important to make sure that you've got someone to ring, but answering the queries that can't be self-served either through our website or through our portal. For example, password resets can be done really simply through our system, as can case updates, without having to wait in a queue and without having to talk to an underwriter. We can recruit more people, which we have, and we can get colleagues back from other parts of the business, for example, our collections team. And the more we can return people to offices and that the kids stay in school, the better that is for creating capacity. In terms of improving service, that's the two-way street, I think. More time we can spend on processing, the quicker turnaround we can provide for you, and the fewer questions we need to ask you. And there are fewer questions then that you need to ask your customers. More time for new inquiries for yourself, and then we can launch new products and stay out longer. And that's ultimately what this is about. If we can work with you to improve service, then we can stay longer, for example, in the high loan to value sector. And that's what we're seeing at the moment. So ultimately, it's better outcomes for everybody. And so tips, there are some things which are really common sense, understanding what lenders offer. Talk to us up front, talk to your BDMs, contact us through our BDA web chat service, both there to help you understand what we will ask for up front, help you to make sure that is a case for us, and also then to self-serve where possible. So if it is a case update or it's a password reset, or you're just wondering how long it's going to take to turn something around, all that is available and really will help you save time, because you won't have to wait in a queue. Self-serve where you possibly can and use the time to ring us up where it's really something we can help you with. Package fully on day one, but only send us what we ask for. The more you send us that we don't need, again, the more problems that can cause. So check everything. The amount of time you can spend up front is probably 20 minutes extra up front, means that you can then maybe save 5, 6, 7, 8 hours throughout the process of the case itself. And choose your lenders wisely. All the lenders should have their published times on their websites, so make sure on day one you're choosing the lender that fits your client's circumstances the best, not necessarily the cheapest rate, but the one that gives the best outcome. And then set and manage expectations, and remember, by helping us to help you, you can provide a better service all around. And then finally, growth series. This is something that's been around for 2 years, but over the last 6 months we have really worked to try and make it valid and relevant for the current times. So we've created a COVID-19 section, and that is not only telling you about what we do, but giving you podcasts, webinars, things that you will be able to use in your day-to-day running of your business. How to, for instance, improve your website, how to create Zoom meetings or Teams meetings for your clients, and then some experiences from key people within the industry. So lots of really good content. An application packaging guide is on there, and also a video which is understanding the home buying process. Can be branded actually for yourself, for your own business, and can be sent out to clients so that they really understand what you're working with and what's important. Because if we can create what I class in here as a good cycle, that's our capacity to lend. It allows us to launch and improve our products and then work together to create a better service. We can build relationships and continue increasing that capacity to lend. When this goes wrong, the first couple of bits are done. We don't then work together. There become service issues, and we have to pull products, and we create service issues and backlogs that we then have to clear. So in summary, I think there's a lot of factors at play here. We all do want the same thing, and communication and signposting are absolutely vital all the way through, between lender and broker, between broker and client, and between broker and builder, broker and estate agent. That making everybody aware of what that position is. Choose your lenders wisely and make sure you know everything about them to help you get that case through more quickly. And remember how much help there is out there, because if we can help you to do better business, we're helping each other. And finally, thank you for all your support over the last 7 months. There's been some great examples of lenders and brokers working together. And I think ultimately, I say, we are in this together. We want the same thing. And with that level of support and working together, we really can help you to help yourselves. Thank you very much.